Goeiedag, ik heb vandaag een nieuwe gast op de podcast, Petr Pinkhasov. Peter, how are you?
I'm very good. How are you?
Very well. I know you're a very versed trader. You're very active. Are you solely a trader, or do you also have more of a long-term investment style, or are you very dynamic day to day, in and out?
Um, I think it depends on the mandate that I'm looking for. So, as a hedge fund manager, business owner, my responsibility is to have a very smooth and progressively linear equity curve. So, in that business, I'm very active, trading a lot, ensuring that my return profile and risk profile matches that fiduciary duty. And then, in my own personal long-term sort of, let's call it, 6 months, year out investing, it's not so linear. There's drawdowns, sometimes, 20, 30% plus drawdowns, if I see something secular that I like. Um, and that's just part of the game. That's a different investing style. So, yeah, I would say it's different, depending on different time frames. And yeah, I'm involved in real estate. I own a separate business as well outside of managing money. Quite entrepreneurial, and yeah, just trying to do my best and not get hurt too much in the painful periods that eventually come with all different investment classes.
Right. Talking about painful periods here, and maybe let's talk single out a single day here. Yesterday, actually, it was quite a peculiar day on the market. We had the biggest drop of a single share, Nvidia, ever. They lost like 600 billion in one day, a record. That's probably not soon to be broken. Is this a one-off, or how do you see this? Is this like a precursor to something bigger, or what do you think?
It's a really good question. Everybody who's super smart thinks that it is Chinese kind of propaganda, that they actually spent quite a bit of money to train this large language model. And yeah, the weirdest part is that this news was already out for like 3 weeks. I don't know if you read the DeepSeek came out and they said how much it cost to make, and all these benchmarks were outperforming OpenAI and Claude and all these things weeks ago. And then all of a sudden, everybody started caring over the weekend, which I thought was very strange. So that's the only thing that's kind of sketchy to me. But with regard to its underlying impact on NVIDIA, yeah, it makes sense why this might be quite bad for NVIDIA. If all of a sudden it's not so much about the hardware and it's about the process and the mathematics and the way to get to good results that isn't hardware dependent, and there's been such a glut of these GPUs and CapEx investment towards it, that becomes like a huge sunk cost, and that just pulls deflation even further, which is good for consumers and end users because if this stuff gets commoditized and it keeps getting cheaper and cheaper and cheaper, it's good. We really don't want Meta or just Tesla or just one company who just gets to the end game quickly. If China pushes the open source nature of this and, kind of unmonopolizes the whole AI space, I think that's actually a net positive for the world, but it's a hugely deflationary thing that happens. And as a result, Nvidia, which became, was the biggest company in the US, just drops 20%. That's quite meaningful. And I was quite surprised yesterday. A lot of stuff was actually green. I don't, if you looked at some of the single names in the S&P 100, it was actually pretty good. Volatility was quite tame for such a move. So I'll reiterate, it's all very sketchy because the news is old. The market impact was eh. It all kind of happened in 12 hours. And yeah, I think it still remains to be seen. I'm quite cautious, but I'm also, medium term optimistic for that. I don't think this is too material unless it really starts to the deflationary aspect really starts to impact the overall market. But we're in a high growth environment. We just have a new administration, which we saw in 2016, 2017 do their thing. So there's a playbook for a high growth environment, and maybe the onset of a deflationary tech thing might actually balance out with the whole growth thing pretty well. So we'll see. I'm pretty optimistic, but caution in the wind.
But one of the stocks that was up yesterday that I follow quite closely lately is stocks like Alibaba, Chinese tech giant as well. That was up a couple of percent yesterday, if I'm not mistaken. Do you think maybe investors are going to look more at China here investing? It might be at a turning point here. That's my opinion. What do you think about that?
Yeah, I remember buying Alibaba at 220 after COVID when it started going down. I was like, oh, it's still so cheap. And then I got stopped at like 170 or something. And now it's all the way down here and I really like it. I think the whole China space really depends on a couple things, and that's interest rates bottoming out in China, and then the dollar starting to turn. Now we
Yeah.
saw both happen in the last month, basically. The dollar in the US top basically on the CPI news, and Chinese interest rates have started to come off their lows, and the Hang Seng and CSI, they're all starting to kind of come back up. Um, I'm quite bullish on Alibaba and emerging markets here, and that's just a play on the dollar. And I mean, the chart patterns look great. I'm not really too technical these days, but my upbringing is pretty technical, and yeah, those charts just look really fantastic, really great bottoming basis, especially with um, the nature of how the dollar looks like it's about to top. And if you look at 2017, the run up into the first Trump administration with the dollar, it's identical. The year before just had a really strong surge in the dollar, and then Trump comes in and he's a weak dollar guy, and that's it. And then emerging markets were up like 30% in 2017.
We're expecting a
Uh,
repeat of that.
You know what? My mentor, my first boss used to say, what do you say? He said, don't try to make money the same way twice, which I think is a pretty good rule. But in this case, it's almost how many years apart? 2017. It's 6, 7 years ago. So I would say that rule can be there's a statute of limitations on that rule. So
Right. Do you have any thoughts on crypto? As far as I'm concerned, if you look at something like Bitcoin, it's pretty much, the S&P or the Nasdaq on steroids. Any peculiar, maybe some thoughts there that maybe that's about the thing maybe has stopped at 100,000 here or
I was pretty bearish when it failed 100,000 the first time, and there were some pretty good trades in the short term to play against that. And now it's holding up really, really well. There's some weird optionality with this new administration that they're obviously very pro crypto. Um, I don't know if they'll be buying crypto for the US government because they already own a lot. It's just sitting in the Department of Defense or wherever crypto they seized for a long time. Um, it's just sitting. I don't know if they're gonna just move that to some kind of different branch of the administration. I'm really not too sure how it works. But overall, crypto is like a weird, especially Bitcoin. Um, People always say that it's a fixed supply, and all this stuff, and but the truth is the supply gets lower every day. Institutions, people lose access to their wallets and keys every single day. Quantum, I don't think is going to be an issue, at least for a long time. um, and as long as they can change the cryptography standards to keep up with quantum, we should still be good. So overall, supply keeps getting lower. The US government is now looks like they're very peculiarly interested. I mean, the president's son is like crazy about crypto as well. Yeah, that's my only kind of low IQ thoughts on this whole ordeal is that we have a new administration that's very pro crypto. We're above 100,000, and markets look like they're still going to be doing okay for the foreseeable future.
yeah. Looking back at maybe a short dog trade, which I guess emerging markets kind of is historically. Are there any countries that you're looking at that you think are more interesting than others, or are you just buying the bunch basket of everything together, just playing the general theme, or are there some? Because I've been with my subscribers, I've been in Argentina. That's paid pretty well. I think so far we bought the low in Brazil here. Very hated. We buying the dip in India, which I think is very good secular team. Or do you also use an approach where you try to pick out the winners and hopefully you get it right, or do you just buy the basket?
I just buy the basket. I agree that India and Argentina are probably the big winners from that basket. I just because all my stuff is modeled out for specific instruments, I don't want to be right and then lose money picking specific things just in case I'm wrong on India or something politically happens in one country. Because I've gone through that and it kind of sucks and I just don't like to go through with that. So yeah, like for example, when I do all my emerging market quantitative models or whatever, I typically use like EEM. And when I do allocations, it's very liquid. I can get in and out in like 10 minutes, even on a huge position. It's just very easy to work with. And yeah, it's a little bit less free. And yeah, do I give up some alpha here and there? Yeah, definitely. But, my whole approach is dynamically sizing for the big move, right? It's not there's like a little bit of a execution art to making sure you catch the real move on big size and scale out and kind of you got to have some swagger and finesse on the execution front, and that's what I think I'm good at. So I try not to be too picky with the specific instruments and try to make up for it with how I trade basically.
Yeah, maybe you don't get the alpha but you also don't get the idiosyncratic risks, I guess. So
Yeah.
you're not looking at specific countries, you said. Are there maybe specific subsectors or niche sectors that you think are very interested that people are not paying enough attention to here?
Um, Kind of, but the other way around, I think people are paying attention to them and there's a lot of fluff. Like, for example, the whole quantum computing space, I've been pretty active on the short side for the last few weeks in those things. The defense stuff is actually looking really good. I think that regardless of the administration, it seems like our country is just hell bent on being warmongers, and it doesn't matter who the president is. These things are sort of nationalized companies at this point, and they just keep offering opportunities. Yeah, the semiconductors obviously are in play now. Um, yeah, that remains to be seen how that's going to play out, but it's holding pretty interesting levels in the I would say in the higher time frame for such big news. Nvidia is still I would say holding up pretty decently, and the rest of the semis as well. So yeah, I take it, 1 week at a time, 1 month at a time. There's different themes that pop up here and there, and if it's fluff and BS, I try to be on the short side for those things. And if it's something secular and moving, then I try to execute the best way I can. And then if it's something that like for example, I'm expecting the dollar to turn, and that's more of a long term thing. Then I allocate and I kind of trade around those things. So
You're
it's like
looking for the dollar to decline for years here, or?
just this year we'll see. I have a hard time.
Sure.
I'm pretty good at predicting the turns. I'm really bad at predicting how long trends will last. Um, I've never been good at it, and I always buy too soon and sell too early, and it's always
Right.
it's the hard part of markets. Being perfect, you can go kind of crazy trying to be perfect, but yeah. So yeah, it's just taking everything, have a big picture view, allocate that way, and then have some cash and money to trade opportunistically in between those periods to try to, like I said in the beginning, make sure my return profile is how I imagine it to be.
Right. Let's maybe try and paint a picture here. Let's say we're at the end of the year here. The stock market is, let's paint two pictures here. stock market's up 20%, and the other scenario it's down 20%. What caused it? What caused the market to go up another 20% here or 25%? And in the bear scenario, what caused it to have quite a bad year? If you were to
Oh,
say
that's
something up.
one question. Yeah. Well, okay, down 25% is the tariffs backfired. Every country didn't care if we just stopped exporting to them and we stop importing from everyone else, and all of a sudden we're kind of like a landlocked country that's just uh dealing with ourselves. I think that would be quite bad. That would be almost as COVID bad in terms of I would say returns. Yeah, oil prices would just deteriorate. There'd be no growth. It would be, you'd see minus 30% easily. Uh, we did see, the president of Colombia kind of cave in really quickly to the whole, I don't know if you saw the
Yeah.
news with that. So maybe we just set a precedent like don't F with America. Who knows? But if countries do kind of coordinate and kind of don't bend the knee, it could be quite bad, I would think. And then for the upside case, actually one more downside case.
Sure.
I think in a high growth environment, we just kind of finished combating inflation, and year over year CPI is still pretty elevated. It's not necessarily at the low end of the spectrum. And if that inflation thing starts to come back, and Trump is obviously a low rates guy, and you maintain a low rates policy and there's super high growth, you're going to get inflation that could be a little bit sticky. I don't see that costing like a 20-30% decline in the markets, excuse me, but that could still be that could add a lot of volatility, I would say from the summer into year end or something like that. And for upside, yeah, I would think that the world is happy. We saw, Middle East crisis solved, Ukraine, Russia solved. China goes up 100%. We have amazing trade deals with them, and they have that quote unquote golden age that they're looking for, and the market's up 30%. And we're still in low rates, and there's no inflation. I don't know how that'll happen, but I think that's their goal.
But can you handicap these two scenarios?
Um, it's too outside of my time frame, I think.
All right.
Maybe. It's just yeah.
Fair enough. Fair enough. So you have some thoughts on interest rates and the dollar. You must also have some good ideas on or at least maybe some positions on the commodities trade. Where are you on there? You must be somewhat constructive, I guess.
Yeah, I was very surprised by the oil rally at the start of the year, and energy stocks that went up pretty significantly to kick the year off. Um, I started shorting those at the beginning of January, and those went against me for a little while. But now it's starting to turn the other way. I'm a little bit worried that if China really starts to do well, that's going to provide a pillow for the whole commodity space. I was very surprised to see copper names not really performing too well at the moment, given how strong we were just saying the whole China space is, how interest rates in China are starting to perk up. So maybe that's an opportunity there in copper. But I'm pretty bearish on commodities. We can control the oil prices in the U.S., and it seems like they do. Trump wants lower oil prices and he wants more drilling, and we do have a glut here in the US. And if we do start exporting a lot of natural gas, etc., that's profitable for the companies, bad for the prices. And yeah, but if China really starts to get going, that's gonna push oil prices higher. So that's the only thing I'm worried about here as a oil short is and I'm trying to figure out a way to hedge that, and it looks like buying copper might be the way to do it, but they're just so ugly. The names they just keep making new lows um, on those commodities.
Another energy related thing here is that I'm personally very involved and have been for 5 years or something. Is nuclear uranium. Do you have any thoughts there? Are you a bear, bull, or neutral, or have you looked at it?
I've looked at it. The first time I looked at nuclear was Camco, CCJ back in like
Yeah.
2015. Um, and it seems like everything that people were talking about 10 years ago is finally starting to come to fruition. And it seems like it's a very bullish time to be a uranium investor, especially if some of these data center things are real and they're going to use nuclear to power a lot of these things. I think that's quite bullish as well. That's a whole new facet that nobody was even thinking about a year ago. Um, yeah, I'm pretty optimistic on nuclear being a super clean energy and providing you know a great return profile for the next 5, 6 years minimum.
Right. Something that I just thought of here that I thought was really a very eye-opening statistic. I saw the interview with Thomas Perry from Interactive Brokers, and he stated that 70% of the volume on Interactive Brokers go to like 10 stocks. And I wonder, I'm not an expert by any stretch of the imagination, but I was wondering if 70% goes to 10 stocks or 30% for all the rest. Uh, does maybe a giant bull case in things beaten down things that are just cheap, does it require the 70% to go to other areas?
Can you repeat the question one more time? Sorry, I just want to make sure I
Yeah,
understand.
I mean, does one area or commodities, for instance, or emerging markets, does it require the big richly valued tech names, for instance, does it require them to fall behind so that you get a lot of outflow from the tech names and go somewhere else because it's just a one man show, you could argue at this point, or one sector show?
It's a really good question. Uh, it's something that's always confused me. There's always, I started out in markets more than 10 years ago, and it's very interesting. Sometimes people say things like, "Oh, the whole market is just one stock." I remember it was like Apple. Everyone's saying the whole market is Apple, and then it was like, "Oh, the whole market is Amazon." All from like 2015 to, or from like 2013 to 2015, everyone was like Amazon, and then Amazon would go down like 30%, and then the market would still be, at or near all-time highs. And that's just how indexing and things like that work. Once you build up value, it kind of stays there. Um, with regard to do you need outflows to go into to get a really big move in, let's just say, commodities or some specific part of the market? Um, I don't think so. I think that's more the case for probably for fixed income, specifically government bonds. I do think that there's a give and take and a trade-off there in the money markets for stocks. But with regard to, I mean, all of this stuff has to be back tested, and you're asking a really good question that I'm just answering anecdotally without any data. I just know that it's true for fixed income and money markets. Um, I don't know if it's necessarily true for big commodity runs. I actually can't remember the last time we had a huge, huge, huge commodity run except off the COVID lows. And obviously both did very, very well back then, but you could argue that all the money was already taken out and it was just going back into the markets. It wasn't like money was coming out of somewhere. It was just a flood of money going into the markets after 2020. Um, so yeah, I don't know. It's a really good question.
Fair enough, fair enough.
No.
Um, well, basically since COVID, I guess, we've seen a lot of influx from new investors that tend to have a little bit maybe a weird, or I don't know how to call it. They have their own intricacies and all that. They like crypto. They like have an enormous appetite for risk and all. If you will look at the new investors that are coming to the market here, what do you think are the biggest mistakes that they all tend to make that you see?
Huh, interesting. Um, from what I've seen, I'm very optimistic on this new investor kind of class that came in after 2020. I think the ones who survived at least picked things up pretty quickly. They got rug pulled very quickly after COVID, 2021, 2020. So they experienced a 40% drawdown in markets really, really quickly, which my first, thing in the markets was the European financial crisis back in like 2011, 2012. And that wasn't like a huge decline. There was just a lot of volatility, but a 40% decline in the NASDAQ back in 22, I would say that's pretty significant for a new investor. So they got, the scars on them pretty quickly and they're learning stuff pretty quickly. I would say that they're more short-term oriented, and that's maybe a good thing, that's maybe a bad thing. But they know how to hold somehow their profits really, really well. And they somehow know how to get out really, really well also. So as soon as things get like they call themselves like vibe traders, which I love because it's all about feeling and intuition. And if they feel like it's starting to stop going up or they just get out, they don't. But when it's like when things are really, really working, they're not quick to take profits or something. It's something that I think I could learn from. I think we could all learn from it a little bit better. But at the same time, they also hold out for too long sometimes, and things start to turn, and they hold, but those are mistakes outside of that initial process that can be tweaked and altered. So yeah, I think it's a short-termism. I think it's a lack of yeah, it's just a lot of rug pulls, a lot of movement up. They just see a lot of action, and it'd be very interesting to see how they deal with kind of secular trends. But they've done very well, I would say. I don't know. Every retail person I know somehow is still making money, and when I was coming up, everyone was like, "Oh, you never traded through a rising interest." I started in like right after the financial crisis. Everyone was telling me, "Oh, you never traded through a rising interest rate market. Like you're going to lose all your money when that happens." And fast forward, 13 years, I don't think it was too difficult to trade a rising interest rate environment. All you had to do was short bonds every single day. It wasn't too hard. Um, so yeah, I think I'm pretty optimistic, but with regard to like really specific intricacies, just the short-termism behavior is the only thing I noticed.
Right. Is there anything that I forgot to ask you that you really want to bring up that you think maybe other people are missing or not paying enough attention to, or maybe things about yourself that people ought to know?
Um, I don't know. I used to love talking about myself, and I don't like to so much anymore. But in terms of markets, yeah, I don't know. It's been a very exciting 2024. I'm pretty optimistic for macro for 2025. I think that I would just say maybe I'll just express what I've learned in the last. I think um less trying to predict, more trying to be opportunistic because I think these markets are rewarding, having some extra money on the table for really crazy events that happen. It seems like every month we get something crazy that happens, and I've started to trade less and less bigger overnight. I still keep a pretty significant gross positions overnight, but it's not. I like now I have a lot of day trading opportunities. It just keeps popping up every single day with some of these things that are in play. So I would say that if you're long short trading and you're not intimately involved in day trading, I would say give it a shot. I think if you're disciplined, the markets are really really rewarding at this point to be a little bit more opportunistic in the short term.
Awesome. Thank you very much for participating. I enjoyed it. You had some great insights, and hope we can do it again down the road somewhere.
Yeah, sounds good. Thank you, Bart. I appreciate it.
Thank you. Cheers.